We're going to do things a little bit differently on this chart. Now, this is the Great British Pound versus the Australian dollar chart. Now, what we want you to do is just pause the video just momentarily and just look at this chart because you are going to be working out what you would do in this sort of setup. So would you want to be buying this or would you want to be selling it? And if you are wanting to be buying or selling, what tactic would you use? So just pause this video and have a few seconds just to reflect on everything on the chart. So the first thing you need to consider is trends. From this period, the trend was down, so you would want to be selling rallies. We get to a period then where there's sideways consolidation. Ever since we breach this trend line, the trend then becomes bullish. We break above and we back test. We break above the next resistance and again and back test. And now we look to be heading up towards this resistance point. So at this time, you should be looking to buy dips in this setup. The problem is this is rising market and it's rising very quickly, and we call this a runaway market, and it can be very hard to get an established entry. So we would need a big pullback to possibly a previous support line. There are other key factors that you can use, and we can use the 2-day rule. You can see one big down day, two big down day, the third day gave us a rally. So little things like the 2-day rule can help. So other than a pullback to the support line, the only other way we would probably want to buy this is if you get something like the 2-day rule that you can use, or maybe a bull flag. And arguably a bull flag has formed already on this chart, but not too sure if it is a textbook bull flag, so not sure we'd put too much faith in it. But other than that, you need to be very careful in entering runaway markets like this one.